Hi, I'm Neil Carstairs, your property investment mortgage specialist from Mortgage Corp. Today we're going over self-employed. When a bank assesses someone's income, when it comes to like a PAYG or got a job, you've got pay slips. Every week, every fortnight, that income's coming in. When you're self-employed, the bank's got to look at history. So in most cases, we're always asking for 2 years tax returns. Now, where a lot of people don't understand is that we also need your business and personal tax returns with a notice of assessment. Now, NOA, sorry. So the reason we go on history is we want to see consistency. Now, there is a niche where some lenders are only taking the most recent year's tax return. But with the COVID-19 pandemic underway at the moment, the way banks are assessing self-employed clients are in two factors. Number one, industry type. So if you're in hospitality, entertainment, tourism, the chances are we're probably not going to be able to put an application together unless we've got really strong mitigating facts, whether it's letters from accountant, bank statements, and I'm going to go into that shortly. When you're going for a loan as a self-employed person during the COVID-19 pandemic assessing period, we need to look at tax returns showing business income, personal income. We also need to see your most recent business activity statements, your BASs. So up until March, and then April, and then June. When those BASs are ready, we need to see those. We'll also need to see a letter from your accountant, okay, along with P&Ls or latest balance sheet or running statements. On top of that, we'll also need to see the last 6 months or 3 to 6 months worth of bank statements. And the reason why we want to be able to get this information and pack up as much as we can is we need to show your ability to repay. So going for a loan, we will either need 1 or 2 years most recent tax returns. We will ask for 2 years. We want to see consistency in the business. Whether we use the 2 years or not is entirely up to the credit assessor at the time. We'll need to see the business tax return, the personal tax return. Now, if you're a company, really important to understand that the business or company net profit can also be used if you're a single director or you and your partner are directors in the same company, can be used to increase your personal income. There are other things we can look at like depreciation, interest, add backs. But if you've got liabilities in the business like leases and car loans or equipment hire, we've got to be really wary on how lenders treat that as well, because essentially it's a liability. From our point of view, we want to be looking at the net profit with your personal income. Now, if you're a sole trader, obviously we would need to see 2 years tax returns for your personal, as well as any business activity statements, a letter from the accountant accompanied by a profit and loss and balance sheet up to date, along with some bank statements. This will help mitigate our application and give some strength to show that you're actually trading. It is important to understand that you are taking on a liability, and it's a large liability. So being able to repay this debt means it won't affect your credit rating going forward. So if you do think you're going to be having issues with your business going forward, then really think about when and where would be the good time to go for a loan. Being self-employed does come with a lot of risks, and lenders understand that. So depending on what type of industry and whether you're a tradie, building, construction, engineering, architectures, doctors, all of these type of clients seem to be pretty safe if we can show some continuity in that ongoing income. And we do that with getting as much information together. It doesn't mean we're being intrusive. It means that we're making reasonable inquiries. And that's really important in putting together a strong application for your finance. Being self-employed has its bonuses and it has its disadvantages. Really good accountants will obviously try to minimize the amount of tax you pay. That can sometimes hurt when it comes to borrowing money. We understand that. So we'll look at all of this information and put together the best possible solution we can. Go to our Facebook page or click on the link below to check out any other videos and up-to-date information we're doing. I'm Neil Carstairs from Mortgage Corp.
My name's Paul. I've been self-employed for the last 10 years, working as a carpenter. I found Mortgage Corp by Googling them after having a lot of difficulty through the Big Four, as many people have. Being self-employed was a big challenge even for the banks to try and put money together for us. My wife's also self-employed to add to our challenges. Finding Neil, straight away he gave us confidence that we were able to source and refinance, structure everything we needed to. When my wife and I have sat down about how we can put together something to invest and move forward, we've now onto our third property, hopefully onto our fourth. One of the most important things in our strategy is having good team members around us, and Neil's been a driving force and one of the biggest components of us being able to achieve what we're onto now and will be in the future. The thing we liked about Neil was he was straight to the point. There was no fuss, there was no hassle. He spoke very directly. Neil had a process in place that we had to follow. We did try and flirt around different ideas that we always had to come back to the way he set up and the strategy put in place, and that was successful for us to be able to get our pre-approval and purchase a recent property. I'd definitely recommend Neil from Mortgage Corp. I'd send him on to my family, friends, everyone I could. Couldn't speak highly enough of how much he's helped us over the years.